with so many important issues facing the American economy today, like the recent news of a sharp contraction of the economy by almost 3%, the continued lack of unemployment benefits for millions of Americans, the massive growth of low-paying service sector jobs that continue to replace the lost middle-income jobs, and another possible shutdown coming in September, courtesy of Republicans, you'd think that Congress would be rushing to fix all of these. Or not. Pretty much everybody knows by now that Congress is essentially useless. But not only are they being useless, but now they're working to make things worse. How? How could they make things worse? Well, House Republicans have put forward and passed a new Wall Street deregulation bill. Yes, they're deregulating derivatives again. Now, this bill would, of course, weaken the much-hated Dodd-Frank even more. For example, in it there's something called the, quote, London Whale Loophole Act. That would allow American banks to skip Dodd-Frank's trading rules on derivatives if they are traded in countries that have similar regulatory structures. Read that they have also deregulated derivatives in that country, so they can just skip it. Why have regulations when I can just skip it? That's essentially what it is. Now, none of this, of course, should be any surprise because, hey, it's the House, and hey, it's led by Republicans. Republicans love Wall Street. But they're also being helped by a growing number of pro-corporate Democrats. Yes. Surprise, shock, and horror. I'm not really all that surprised. Now, the Huffington Post explains. Many components of the bill approved Tuesday had previously passed the House with bipartisan support. Democratic opposition to this bill was broad, with only 46 Democrats voting in support. That is a marked change from several recent House votes on Wall Street deregulation that have drawn substantial backing from dozens, and in some cases, an overwhelming majority of House Democrats. Now, here on TYT Community, and basically on the so-called liberal media, we love to talk about the divisions within the Republican Party, and we love to focus on those. But we don't talk often enough about the ones in the Democratic Party. Now, a good example of this is the Congressional Black Caucus, which normally votes very progressive, but has recently had some members that have been voting on things that would help out Wall Street. And there's a pro-corporate group, also called the New Democrats, that loves Wall Street and helping out big corporations. Now, these groups have been voting with the Republicans to weaken regulations on banks, and specifically derivatives, because the banks have a lot of power. Remember, Dick Durbin, famous for saying, the banks frankly run the place. And it couldn't be more true. And now more than ever, lobbyists from Goldman Sachs have been working extra hard on buying off more Democrats. So this is the system that we have. Now that money has overtaken our politics, and now that the Republicans have essentially driven themselves off a cliff, Wall Street has decided to throw more weight behind the Democratic Party in order to maintain their stranglehold on our politics. Now, I wonder if the media and Democratic voters will begin holding the Democrats in office more accountable when they start voting more and more against their constituents. Now, Sean, what do you have to say about this?
Well, I mean, this bill passed the House. It hasn't been signed into law. The White House said that they are strongly opposed to it, but we've kind of heard that before, where Obama will say he's opposed to something, but then he'll sign it like with Authorization Act. This law sounds like it probably could make sense if, like, you have the same regulatory structure in England, right, and you don't want your banks to have to take the extra steps if they're already doing that for England. So on paper, it sounds like it could make sense, but we all know how these tend to shake out. They tend to advantage bigger banks and bigger financial institutions while shortchanging the little guy. So, like, I don't know how exactly I feel about this. I mean, it's like, to me, because to me the issue it really isn't the amount of regulations; it's the amount of regulations and that are tied to guarantee. Basically, we've guaranteed that these companies can't go out of business. So it's like we can't let them do whatever we want unless we're going to actually let them go out of business, and they know that. So we've sort of incentivized bad behavior, and now
Right.
there's less rules on companies that are already incentivized to do bad things.
Right, and that's like the most conservative thing that you can say is, hey, if you're going to do business, okay, that doesn't mean that we're going to support you when you fail. When you fail, you should fail. But in this case, you're absolutely right that this is completely not conservative at all. This is pretty much, I mean, this is a good example of socialism, essentially. You're saying that these banks can do what they want. We're going to loosen the regulation on these banks so that when they fail, we will pay for them. And we've already done that once. And now we're basically being set up to do it again. I mean, derivatives are what blew up the economy in 2008, or at least played a significant role in what happened in 2008 and the housing bubble and the crisis that happened afterwards. And we're still trying to recover from that. And these idiots in the House, Republicans and now Democrats that are being bought by these corporations and being paid for by these giant banks that have only gotten larger since they were bailed out by the taxpayer. I mean, what are we doing? It's insanity.
I mean, they basically can operate with impunity. It's like the analogy I would compare this to is if you have like a 20-year-old kid and he goes to Vegas, and you tell him that no matter what amount of money he loses, you're gonna pay him back as his parents. Then that kid is gonna go and play the riskiest, most high reward games, and if he loses, he doesn't really lose. Like the problem with our current banking system is that there's no fear of loss on the bank side. So, like if you have deposit insurance, and you don't put people in jail for fraud, and then on top of that you have no rules, it's gonna be a disaster. Like it's insane. Like it doesn't make any sense.
It's been a disaster, and it's going to be a disaster again. And look, I'm actually glad that the White House is at least saying that they're against it, but just like you said, it's so easy, and it's good to be skeptical about this because they could easily throw in something to sweeten the pot for Democrats and say, hey, look, we'll give you, I don't know, we'll give you the Volcker rule or something like that, and Democrats will jump all over it. And the White House will be like, oh, well, I get something that I want.
Right.
Well, the banks get almost everything they want.
And this is like Obama's go-to move. Like, not to get all conspiratorial, but we've literally seen this in the past with the National Defense Authorization Act. He says that he's against it and he'll veto it. So basically, the liberal opposition is like, well, it's not going to get signed by the president anyway, and then he signs it when nobody's looking, after they make some tiny tweak in the language, and the bill still means the same exact thing. Like, I would be on, if you're against this, I would be on the president to make sure he vetoes this, or get on the Senate, because like the Senate can, it's just passed the House, the Senate can still vote it down.
Mm-hmm. And look, that's what the media is supposed to be doing. Like, the media should be all over this, and they're really not. There's nothing on CNN talking about these, this vote and these new proposed rules and the attempts to water down Dodd-Frank even more. There's nothing about that. And really, it's the media's job to be writing the Senate on these rules, to be writing the president, and to be holding people accountable. And we just don't have a media structure that's conducive to that.